Bitcoin remains a significant asset. As of June 2, 2025, the price is $104,812. Market capitalization is $2,082 billion. Trading volume is $38 billion. Circulating supply is 19.87 million BTC, approaching the hard cap of 21 million coins. These metrics paint a picture of Bitcoin in mid-2025. Predicting Bitcoin's price is a popular activity. Many platforms gather user opinions. Data from Binance users reveals an overall bullish sentiment towards Bitcoin's future price. Specifically, 30.96% of these users are very bullish. Another 36.21% describe themselves as bullish. This means a significant majority, over 67%, hold a positive outlook. On the other side, 16.41% of users are neutral. A smaller portion expresses bearish views. About 6.31% are bearish, and 10.12% are very bearish. This shows a clear tilt towards optimism among this user base. For the year 2025, the general forecast among these users is bullish. Users predict a Bitcoin price of approximately $110,053.50 by 2026. For the year 2030, the consensus forecast suggests a price of around $133,770.72. The consensus among Binance users points to a potential price of $170,729.10 by 2035. The crypto market is known for its volatility. Technical analysis is a common method used by traders. They try to predict future price movements by examining past market data. Tools like moving averages and the relative strength index are frequently used. On a short-term 4-hour time frame as of early June 2025, Bitcoin's trend is described as bearish. The 50-period moving average is sloping downwards. However, the 200-period moving average is sloping upwards. The relative strength index is in the neutral zone between 30 and 70. Looking at the one-day time frame, the trend for Bitcoin is bullish. Both the 50-day and 200-day moving averages are sloping upwards. They are also positioned below the current price. The RSI on this time frame is neutral. However, a weak bearish divergence has been noted in the last 14 candles. For a long-term perspective, the 1-week time frame also shows a bullish trend for Bitcoin. The 50-week and 200-week moving averages are both sloping upwards. The weekly RSI is neutral. Trading bots programmed with technical analysis are increasingly used in markets. Section 4. Behind the price key factors. Influencing Bitcoin's value. Bitcoin's price is not determined by a single element. It is the result of many complex interacting factors. The most fundamental of these is the law of supply and demand. Bitcoin has a capped supply. Only 21 million coins will ever be created. If demand for Bitcoin increases and supply remains constant or grows slowly, the price tends to rise. Conversely, if demand falls relative to supply, the price may decrease. Network-specific factors play a crucial role. Updates to the Bitcoin network can impact its price. Minor reward adjustments are also very important. The most well-known of these is the halving. This event occurs approximately every 4 years. It reduces the rate at which new Bitcoins are created and rewarded to miners. Real-world events also exert significant influence on Bitcoin's price. Government regulations are a major factor. Corporate adoption of Bitcoin is another key driver. Security incidents such as hacks of major cryptocurrency exchanges can create fear. Broader market dynamics also shape Bitcoin's price journey. Section 5. A word of caution: understanding risks in Bitcoin investment. It is essential to approach any Bitcoin price prediction with caution. This includes predictions based on user sentiment or technical analysis. All such information, especially when found on platforms like Binance, is typically provided for informational purposes only. Digital asset prices, including Bitcoin, are famously volatile. They are subject to significant market risk. The value of an investment in Bitcoin can decrease just as easily as it can increase. The crypto market can experience rapid and unpredictable swings. These swings can be driven by news, sentiment, or factors that are difficult to foresee. Past performance is never a reliable indicator of future results. Each individual is solely responsible for their own investment decisions. Making informed decisions is paramount in such a high-risk environment. Relying solely on predictions found online is not a sound strategy. Therefore, conducting thorough independent research is highly recommended. Investors should carefully assess their personal financial situation. Prudence is key.